And good day, traders, good day, investors, and welcome to our copy trading session. My name is Nenad, and I am your instructor and mentor on XM Live. And also, guys, I've been full-time trader since 2010. So basically, here we are in copy trading room. So I want to see how our copy trading goes and where you would put your money if you want to invest. Guys, this is getting better and better every single time I log in. I see some new products here, possibly even new investors coming in. And this is really looking to me pretty good. I need to say, guys, that since last time, some things have changed, obviously. And I can see here basically something that I haven't seen last time, or maybe I didn't see it if it was there. But, guys, obviously, there is something new here in copy trading room that grabbed my attention fully. And because I am favoring gold trading, and generally speaking, guys, I am trading gold. It's one of the markets that I really trade a lot. I can see here, guys, product that has beaten everything so far here on copy trading. Basically, it's called gold future. And look, guys, at the sheer gain of the product. At this point, look, if I were to invest, basically, if I were to invest at this point, I would definitely consider a gold future from this guy here who is actually uh, trading gold a lot. But the only caveat to this is that it still hasn't it hasn't had a long time record. So if this percentage is able to return, let's say, or it doesn't need to be this much, but let's say if it can continue for at least 2 months more, I would definitely consider this. However, another thing also, guys, that I would definitely consider a little bit of warning is description. I buy gold because I think it will skyrocket. Honestly, guys, I don't like it. So here I buy gold because I think it will skyrocket. It's not something that a serious trader does. So you do not trade or buy anything because you think it will skyrocket. It's a big warning sign. So percentage wise, this result is fantastic. Me being a trader who risks a lot, guys, is some look, I like to take risk. And my if I had a copy trading account here to offer, my risk profile would be probably 10 because I also like to risk. All right. But I never sell or buy anything because I think it will go up or down. I don't think. I never think. I just see what my system tells me, and what I see is what I get. Simple as that. All right. So this is a warning sign. I think it will skyrocket. The warning sign is a little bit, I'm not sure why this inconsistency here in terms of description. It's not only gold because in the product name it says gold future. But when you go down and see the portfolio, now we see selling gold. Look, guys, okay, everyone has the right to do whatever they want to with their own account. But if it's a gold future and it says I trade gold, whatever the reasons are, we should not trade GBP dollar. So this is something now a little bit confusing to me, honestly. Also, I do see sell positions in GBP dollar at this level. All right, maybe it's something that it works. I don't see sells, I see only longs here, but it's just me. Anyway, guys, if it's a gold, then it should stay gold. No, don't throw other products into. You are just confusing people here. So, guys, my thing and my final opinion, this is really beating everything else so far. Results are pretty good. I would say great. It needs more time to see, for us to see if this is valid or not. Because, guys, if the result is in let's say 90 days, almost 500%, it's pretty big. I would say also risk, obviously, right? But also, guys, it's something that so far has been working for me also because it's gold. Risk score, of course, is high. Trading frequency is high. Maximal drawdown is really small. But the problem here is only what I see, guys, is inconsistency in the description. Okay, it takes 2 more months probably. For me, this is how I would consider 2 more months to see if this is something where I would put my money. The description is very confusing, and it's not only gold. It has other products, all right? Now, look, US 100 cash. This is, guys, NASDAQ. So why NASDAQ if this is gold future? But anyway, uh, so far results are good, and we will see how it will perform, but it has a small warning sign. Another product that has also attracted my attention, of course, guys, is 120. I always look at the return because if I want to put my money somewhere, guys, the first thing that I want to see is return. Then I consider everything else. How big was the risk? How big was the drawdown? What kind of strategy it uses? Is it a martingale strategy? Is it grid trading? Is it averaging down? There are different strategies, guys, in the performance field because look, we all use different systems, different methods, especially if it's expert advisor. You need to use different money management usually than when it comes to manual trading, right? So, in my opinion, guys, uh, everything matters after you see the total result. Everything else matters later, right? So, as I already said, different portfolios has different uh, money management, of course, routines. But some routines are usually the same. It's either martingale, grid trading, or averaging down. If you want to see big return, because guys, if you want to see smaller return, you don't use martingale. But for me, martingale, money management, or averaging down, or grid trading is something that I would always use in expert advisor, and this is something that gives overall best results if you put the certain threshold uh, in your money management algorithm. Here we have 125.25% gain in the last 30 days. All-time high is 324. This is good. Uh, Also, guys, only 2 losing months, which is normal, more or less. This is why I say every time you open a product, you need to see how the longer the history, the better it is. So it's also one of the variables that I look. So previous method gold futures, I still wouldn't consider until at least I see 5 months of trading performance. 6 months is good to actually measure if something is good or not, or let's say at least if something is working or not. Here we have 5 months, which is 6 months actually, which is pretty solid. In my opinion, this is also worth investing in. Uh, Better than previous product because it has longer term history, and it's something that it's pretty clear. Uh, though I like the description, to be honest. Those who lose well in the right way becomes winners in the long run. This is what I like, because this is very true. This is what I've been saying on my XM Live sessions very often. You need to lose in order to win. Through losses, you make wins. Guys, money management is the key. Think about this. This is very smart from I don't know if it's a guy, man, woman, girl, whoever trades this. It's very well said. I like the description, intelligent wordplay. And Nasdaq win full auto trading. This is, guys, completely in line. It says it's Nasdaq full auto trading. This is it, guys. If you go to history, you will see that it clearly trades Nasdaq, and it's something that grabbed my attention. Pretty solid, I would say, expert advisor. Uh, if you go, guys, to risk, of course, risk score is high, right? But, guys, look, I would myself only consider high risk score. It doesn't necessarily need to be 10. It depends, of course, on how much money I want to invest. If I want to put all my surplus of money in, then I would diversify my portfolio. I would put few parts, of course, of my overall capital to smaller risk, well, not small, but let's say 3, 4 risk score expert advisor, and everything else I would put to high risk score between 8 and 10. And I would always go with the 10. At least one part of my portfolio would be dedicated to maximum risk score. Because, guys, this is how we make money. If you look, we have live trading sessions on XM Live. If you don't show your trades, if you don't put your trade where your mouth is, it's futile. So you really need to take some risk in order to make some good gains. So for me, this is something that I would consider. But look, guys, it's normal. Maximum drawdown 60%. If you want to have 125% win, your maximum drawdown usually needs to be higher. So from that perspective, for me, this is good, guys. All right. I don't think that if something has maximum drawdown of 60%, that it's necessarily a very risky thing or it can be bad for your account. Simply put, guys, those are profiles from expert advisors, and every positive expert advisor that has more than 100% win is, for me, longer run, at least as I say 6 months, it's considered to be good. Now, if drawdown is less, of course it's better. But look, guys, it's purely based on Nasdaq. We know that Nasdaq is product US 100. It's equity index, right? That has a lot of movement. Also, it can be extremely highly volatile. It also has correlation with other intermarket correlated products. Forex, Australian dollar yen, and dollar yen have sort of correlation with, of course, Nasdaq. It's because of yen, not because so much dollar. It has, of course, with dollar, but it's more about yen, right? And we know what happened to yen last couple of months. So this is good result overall. You need to consider everything. You just cannot consider, all right, I see a risk score, I see profit, I see drawdown, I will take a... No, guys, you need to just dissect. Why is that so? So why does it have 60% of drawdown? When the drawdown happened here? Is it only Nasdaq or other products? Does it use grid martingale averaging down? Look, when you consider all these variables, you clearly have more understanding of those products which effectively will attract your attention, right? So for me, guys, it's obvious that if we trade Nasdaq, we will have more drawdown, possibly, well, not necessarily, but possibly then when we trade Forex. Because, guys, look, gold, crypto trading, equity trading, especially US equity market, it's volatile, right? So it's normal that you see a bigger drawdown and eventually bigger profits. If you want to go with small drawdown, small profits, you will trade euro, dollar, Australian dollar, something that doesn't move much at all, and something which is pretty, sometimes very uninteresting to trade, guys, to be honest. So this is good, right? And at this point, we can clearly see that it outperformed some of the other expert advisors. Now, when we take a look at something which goes to low risk profile, you have filter here, guys. You click filter, you go to risk score maximum 3, and you just click save. Here, guys, you will see you have all right, 30% return, drawdown 38%. 1-2% drop. Look, whenever I see that return is less than drawdown, so if return is less than drawdown, I don't consider it. For me, this is something that I don't consider valid. The only thing that I look in the very beginning of each, I would say, assessment of an expert advisor or trading robot or copy trading, manual trading, is if drawdown is higher than return. I don't like when drawdown is bigger than return. I don't have anything against 60% drawdown, but return needs to be at least 100%, at least. This is how I trade. Sometimes my drawdowns are higher, but I made also more than 600-700%, because, guys, whenever you want to make good result and have very good return, you really need to have higher drawdown, unless you are using high frequency trading robot with extremely well developed martingale, right? Because, guys, martingale, grid trading, averaging down is something that most expert advisors use, or at least a part of it they use. It's a little bit different to manual trading. Although in manual trading I use something that I call control martingale or inverse pyramiding. But so far it gave me the best result. That's why I'm saying, guys, don't look at strategies that have high drawdown that is higher than return. So in that case, guys, it's always the best to check all time. So for me, guys, the only valid thing is all time. I don't care about 1 month, 3 months or something. All time. Okay, this is 3 month result because it's been live 3 months. But still, guys, look, 23% is all time result, and risk was 38. So still, overall result is lower than maximum drawdown, which is not good in my opinion. All right. So try to see always products that have, it's okay to have high risk, but maximum drawdown against overall result, which should be at least 6 months, should be lower. So drawdown lower than the return 6 month minimum. That's my advice for you. So when you go back here on filters, you can go, I always put high risk score. All right. It doesn't, I don't care if it's human, algo. Let's check everything, guys, and click save. And look at now. We are on the same page again. Return 1 month. Okay, we already can see that if we see that return in 1 month is higher than overall drawdown, probably overall result is also higher than a drawdown. So when you click here, look, all time is 190 versus what was the risk? 46. Very good result. Very good result. So this is also what I would consider. But the only thing that I don't like, I think I said it last time also. I don't understand, guys. We have translate, but look, if you want to go internationally, and these are all more or less, guys, products that are shown on global scale, you need to have English. It's easier. Okay, it's great that we have translate, but some people maybe will not see this. Whatever, guys. It's good that you have description in English. More or less 12 years of experience. Okay, Instagram profile, great. Averaging at support and resistance zone, good. So we know that this is averaging down around support and resistance. The result is very nice. I like it, guys. Look, 1, 2, 3, 4, 5, 6, 7, 8 months, all in profit. It trades Forex, obviously, but it uses a form of martingale or grid. It looks like also averaging in terms of volumes traded. Look, 0.0434. So it increases lot size, obviously, as it makes progress, or eventually, if it has a losing trade, it does increase lot size. It's okay, guys. Look, it's okay. It's not something that I would consider bad. So it looks like money management is very good. But average trade duration 10 days. So this is not scalping. This is more or less medium term trading, or I would call it intramonth trading. Portfolio, guys, obviously here we see that it's Forex based. You can see just by looking here at a portfolio, you can see that it's Forex based. Good one, I would say. Good one, good performance. It doesn't say if this is manual trading or automated trading, but to me this looks, guys, maybe it's a mix. Look, maybe it's a mix. Uh, just by looking at lot sizes here and pairs that it trades, I would say that it could be mixed, guys. But look, there are strategies that you trade manually, but you use expert advisor to average down your losing positions. I remember I had such an expert advisor a couple of years ago. Because I inherently want to take bigger risk, I didn't use that expert advisor for my manual trading because I didn't see big returns. I didn't have big losses, but I also didn't see big returns. So for me, it was less risk, less attractive to me. I just say my own opinion because I know from my personal experience that taking big risk is the way to go in this business. That's why I encourage always products that have high risk, right? Okay. Next one here, guys, is look at this. We have where was it? Wait, guys. I remember before the session I was looking at that product. I think it was. Is it this one? Because I remember it was a sort of fish here at like picture. I think this was one. Set of EMAs. Yeah. Uh, Here, guys, look. This is obviously algorithmic trading. How I know, guys, just look at lot sizes. Rarely you will see manual trading that it uses like this. So this is when a position is in a drawdown, it doubles the size in order to compensate for the loss. So basically, this is something that uses. It's maybe it's not martingale, but it's obviously averaging down. With average down, you need to have a little bit high risk, and I'm correct with this because look, 58.44 is maximum drawdown. Profit per trade average 42, loss is much higher. So this use as sort of averaging down or controlled also looks like potential, uh, not martingale, but more or less a sort of grid. And here I would say, guys, that overall result, if you take a look, is still good. 123% gain in 5 months versus 58% drawdown. I would also consider this one. It doesn't matter, guys, when it comes to automated trading. If average profit is lower than the average loss, we are talking about automated trading. And usually in automated trading, usually results will be like this. But since it's featured here on the uh, copy trading part of your members area, it is good because all of these that are in the first screen here, front page, are obviously pretty good and have high returns. Now, guys, if you go to Crypto Kings, here, guys, you can go with extremely high risk but extremely high gains. For me, I said, guys, already, I also trade cryptos. And what attracted me the most is this one. Yes, it all look, when you click this one, it has very short uh, history. But I would follow this one. Not immediately put my money, but I would follow to see next couple of months how it goes. Because, guys, now look, extremely high profit, looks like it trades mostly Bitcoin. Yes, this is mostly Bitcoin. If you go to asset allocation, guys, let me see portfolio, Bitcoin, GBP dollar, Bitcoin, GBP dollar. That's it. This is Bitcoin trading. It's obviously traded by a human. It doesn't say algorithmic, so maybe it's a mix, but maybe it's fully human. It's okay, guys. And I can see that this strategy has a very high risk. I would put 11 if I had 11. But obviously, so far, it works good. It has drawdown, which is at the top of my risk limit. I would go with, well, 80% is enough, I think. Depending again how much money you invest. If I can put 100%, okay. But in crypto, I would go with between 60 and 80. It needs more data to see if this is something good to invest in. So I would consider 5 more months of trading. So I would follow this one and consider 5 more months. If somehow it shows bad results, but extremely bad results in next couple of months, that are still, but the account is still positive, I wouldn't consider this account because it has already big drawdown, extremely high profit. If it can continue with similar drawdown and extremely high profits in next 5 months, okay. But if the result drops dramatically, it's a warning sign. All right. So always 3 variables: history, maximum drawdown, and total result. If total result is higher than a drawdown and it has a history of at least 6 months, that's it. But also, guys, as I said, consider your own risk portfolio. If you have a neck for high risk, then think about these ones that I show you. If you still like to use lower risk, then you can always filter out and see lower risks. But here, guys, there is a plethora of crypto products that you can also choose from. This one attracted my attention because returns are abnormal. But I'm just saying the trap that you can fall if you don't follow it for at least 5 more months. And finally, guys, this one is something that it has also very good results. So far, guys, not bad. I would say, guys, not bad, but just follow for starters the previous one because it's also 1 month and bigger returns. Thank you guys for listening. This was my review on copy trading. If you want to join my training, see how I go and teach you on XM Live, join every single day. If you want to invest, guys, this is the strategy also to consider and invest without your intervention at all. Thank you for being here. I will see you very soon again. Bye for now.